The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. Dow's down 285, the S&P's down 38. I'll go through a bunch of things in a moment. I have decided over the last few weeks, I've been doing this more and more, and I think what I'm looking at here is technical geometry, because there are so many, the bar symmetry, look how many times it's worked. Look at the formula that I have always talked about, that sometimes the arch formation can give you the same price to the downside. We've got that here. Just looking at these charts, look at the way the 200-period moving average has been incredible resistance, and then it was support, then it became resistance again. Look at the geometry, the symmetry of this move right here at about 5:15 this morning. E-mini goes to about the 463-ish area, pulls back, and then it pulls back. And if you use a particular candle I like to look at the number of bars. It went to two buy modes, and the second one at a peak G just took out that left side high. Then it turned around and made a cup formation. I have a particular formula and a way of looking at the cup formation for the symmetry, the bar symmetry, and then it came down from the low that was made at 632 this morning at 4,057 round number, goes up to the doji candle high at 651 at 4,064 round number high. And I said to myself, oh man, is this going to be one of those 2-click sessions that right here, if it starts to pull back under the 4,059 level where the 200-period moving average is, one short, you could click once, and maybe at the end of the day, towards the afternoon, you can get out with 2 clicks. Another possible 2-click session. And look how many arch formations, dreaded H formations there have been. How often have we seen these peak Ds occur? Peak D once, peak D twice, peak D 3 times at the 200-period moving average, and then you get again the 1-to-1 to the downside. You get to a peak D, and then a single move up. It goes to a peak E in that same symmetry, pulls back, and now we've broken that. So this, the more I look at it over the years, I've thought this is so geometrical. It's not so much algebra, it's geometry. And a subject I used to like a lot at school. I'm not saying I was great at it or anything. It's just something I liked. But that passion is proving to be something where when you look at the patterns, the geometrical formations are what just constantly astound me, because it's as if there's a symmetry in the thinking, the general thinking. All right, enough of that. Let's get on. So on Friday, I had asked, because I did Steve's hour. I didn't do Steve's show. I did his hour. Remember, I like to make a distinction. Only Steve can do Steve's show. It's all these terrific techniques that he's developed over the years. And so you got to hand it to him. He has his own show. He has his own techniques. So what I did is I filled in the hour doing questions, etc. But there were quite a few questions that came in. Either they came in late or I just didn't see them. So I'm going to go right to that right now. So Schlumberger, SLB was a question, the question from Mimi, and just short term, what do I see? Short term, I'm seeing exactly in the weekly chart, there should be a leg D. It made a peak C. Schlumberger, this is basically, where did I put? Don't tell me I lost. How many times does that happen? Let me just drag this across. Yeah, Schlumberger is in the oil service area. I believe it is the service area. And it's trading right now at 53.47, up 68 cents. The way I'm looking at it, I think it's in this digestive phase. And because of that, let me just put rig. I think a rig is in the same area. Rig is Transocean, and Transocean is there. I know I've got it typed in because we've owned this periodically. Transocean, offshore drilling, oil and gas. Yeah, it's the same pattern. You see, there's this digestive phase right now, and the digestive phase says you don't have to break down or anything like that. You could pull back. And there's been a huge move up. I'm just saying it's the same thing if I go to the XLE This is the S&P Select Energy Spider Fund. They all have the same patterns. They've been going sideways. Sideways very often is a kind of a churning action. It means that there's a rotation between newcomers and old and people who've had whatever position it is for quite some time. They starting to whittle away to get out of some of their position, and the newcomers have come in, but they can't really break to the upside because the selling pressure is just a little bit more. You don't see it in the chart unless you're looking at it real closely. And I could be wrong, but I've said that about Exxon now for weeks. It's actually over a month, when it made that whole series of highs at almost an exact top at 114.66. And look where it is now at 109.74. It's not breaking down, but it is using up a tremendous amount of energy. And I think that these oil, the whole oil sector is about to pull back some to take a breather, and then I wouldn't be surprised if there's another surge to the upside. But at this particular point, my answer to the question is, where do I think it's going in the short term? Let's call it near term to short term, and I'll give you the parameters right away. Even if it raced to a new high, my suspicion is it's within a topping formation, so that if it goes above the high, Schlumberger above the 14th of November, 56.04, I think it'll be back here at the 53 level. And the thing right now is it'll make it's so far a successful I have to do this because we always have so many new listeners. Right. So here we go with the Look, I always look at three patterns: straight up, straight down, that's one; cup formation, that's two; arch formation, that's three; and a mix, in this case 1 and 3 red, because if you take out that left side low, you can go a lot lower. We just saw that in the E-mini. And on the right, if you take out the left side, the reverse Y, green, because if you take out that left side high, you can go quite a bit higher. So here we are. We're making this H formation that held. We're making a second one. So I think that Schlumberger is making its second potential lowercase h that goes to a lowercase m formation within a rectangle. And that rectangle can stay a while. But at any point, if Schlumberger takes out 48, let me double check that it's 48 I'm looking at. If it takes out, it has to close under 48. 48.86 was the low on the 21st of November. Then I think it's pulling back. And then it takes time before it gets to this, the Chapman wave methodology says that if you go from a buy signal to a buy mode, you should get to at least 4 higher peaks. That would take it to a peak D. I think it might take a little time before it gets. It could do it before, and then the pullback could be a deeper pullback. But in the meantime, I see Schlumberger maybe as quick trades for a buy, yes, but I would prefer to say I'd hold off any new positions. I'd wait to see how it holds between 48 and 45. That's the area I'm really looking at for the digestive phase. Next question I had was, Vic wanted about OJ. I'm pretty sure he meant orange juice. It's exactly this H pattern that we were looking at here. Orange juice has made a doji candle. Oh, look at the symmetry. When I talk about bar symmetry, it's the same as a peak D. In the Chapman methodology, when we're looking at charts and people say, I'm anticipating a peak D, and then everything goes against it, making it D, and then it finally makes a D, just shake your head and say, how did it know to go to that fourth highest peak? Well, the fourth highest peak was back in July, August, or September, or something like that, 2016, in the 303 area. Goes comes all the way back, and now it's in the leg F in the monthly chart. I'll talk about orange juice when we return.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Back, Basil, Chapman, Tiger Technicians out. Don't forget those Tiger dollars, and you might also want to check out my opening call daily newsletter. We've had some really nice positions and big percentage gains in some and little losses in others. I like to get little losses and big gains. So the big thing here is OJ is that it's produced this pattern, the H pattern that we're talking about, that dreaded H, but it's held the left side low. So it says it could bounce a little bit. My eye, based on the technical, says that there's a better chance that OJ will pull back a little bit more and have a big. It's had a huge move. It's gone from the 130s to the almost to 220. You've got to anticipate sideways move. It's a little bit. I look at gold in the moment. I had questions about that, but what we're looking at is that I think it's stuck in a range. I could call it the rectangle range. I could call it a lowercase h that perhaps can go to a lowercase m, but everything so far points to the fact that if this week there isn't a move to 211, it's trading at 203.70 right now. Above 211, a close above 211, but instead it slips under 200, that we're going to see a pullback, and that pullback says that the low of, there's a continuous contract of 194, the whole 194 area says that if you close once below 193, then that weekly chart has got a peak D with an H pattern that says 191 is the 14-period moving average. You could test that. At this particular point, with the strength of the move to the upside, I see more like a correction rather than, let's say a consolidation rather than a correction, meaning a correction says it goes down to the 180 level. At this point, I think it's more just, it's a holding pattern. I don't see it breaking out yet. I'll look at it again tomorrow, because if by today, instead of being up 15 cents, it's actually, or by tomorrow at this time, if it's trading above 205.60, I think that I have to consider that it is the H pattern with a chance of 211. But it's really going to 216 that says, no, this is a breakout. It's going all the way back, and it should do that by this Friday or the coming beginning of the week, Monday. And that would test the left side high in the 218, 219 area. All right, that's OJ. Ted wanted to know about natural gas. So we had, someone else said, congratulations on that, on picking that leg D. There it is. This is what we were talking about, going to a leg D. That huge leg D going to 24.61 in the UNG, United States Natural Gas Fund. where you took really nice profits on a small position, and then you got out of it completely with a profit, and now it's down to the 17.60 area. So I've been looking at this very closely, because what happens if you have a very good trade and then you're out of it, you tend to say, aha, maybe now I can go back. Now I've got my eye on it. But I decided that there's something going on in natural gas right now. It should be not going $24 to 17. It should be going $24 to 28 under normal winter conditions. Doing this says not only it must be a glut, but the actual demand just at this particular time on the 5th of December is showing that the demand is not as it usually is. Therefore, be a little bit careful. So only on a trading basis, I want to see how UNG, that's natural gas, United States Natural Gas Fund, treats the 17.41. Today we went down to 17.46. This is exactly the area. Where would I do the left side, right side price time match? I found this a little difficult to do because the candles I would normally use were not showing themselves to be as prevalent as I would like. So this low right here says to me, just by eye, this is a measured move that is more just a visual. There's no technicality attached to it at all. And it takes you to today, in fact, to test that level. And all I can say is that I would rather, yes, you could pick the exact bottom by saying right here, if I had a 1 point stop on a 1761 where it is now position, it should hold. And if it holds, there could be even a filling of the gap would give you a 1 to 2 maybe a gain, or 2 to 1. But I don't think this is the way to do it. That weekly chart failed very miserably with that rally. So I'm going to hold off and say, no, I don't see anything in natural gas. Now, please, I didn't say anything on Friday, because what I would have said to you was pulling back underneath this inside track propellant zone says, just stay away. But I probably should have said, oh, you could short it. But no, I wouldn't have done that. I would have said, just, I don't see anything yet. Let's see it holds any pullback. And this pullback is almost 8%. Well, on the low of the day today, it's actually almost 8%. That is a big move. This is where you expect an oversold. Everyone must have thrown their hands up and said, I'm not touching this again. It's just ripped me apart. Well, for those people who didn't have a good move up to that peak D. But in the meantime, hold off. So UNG, natural gas, hold off. Next question came in, Microsoft. Yeah, again on Friday, I was looking at it. I think I even discussed it Friday. I might have even done that in my video, my 1 hour video. It was almost like a webinar on Saturday. In fact, I don't know if I can get this. Let me just see here. I had a number of people say, hey, that was really nice. Thank you. It's so much information. But I did get one person who said, very good video this past weekend, Basil. Thank you. It's like taking a virtual Xanax. Calms me down and relieves anxiety. Yeah, I try. It's like when I do my all-day webinars, and I ask people, I always ask every 30 or minutes or an hour, I say, what did you take this for? What do you want out of this particular session? What am I not giving you? And then like halfway through the thing, they say, you've covered almost all the areas we wanted to ask you questions about, because I think you always have to look at left side, right side. It's the same thing in looking at a chart. You have to say, what are the questions I need to ask, and what are the answers that I need to try to assimilate from those questions? So let's just go back here. I've done a bunch of things. I think I've done much of what I wanted. Oh, question. Oh, yes. Now I want to run the numbers. Why did I say that I'm typed in the wrong place? Sorry. Why did I say that I was looking for a pullback, at least a digester? All month I've been saying, actually from about the second week of November, I started saying, I think that we're in a distilling phase where we're starting to see the leaders just go on a little bit further, but the laggards are already going to continue lagging. But the really stocks that have been hammered in the NASDAQ might see a decent bounce. Okay, that's number one. Number two is, within the context of markets, look, the Dow, if you look at it just even 3-4 weeks ago, the Dow was at the 34, let's call it the 34,000 level, under it, and over it, just around it. And look what happened. We went to 34,595, and now we're at 34,180. So we've really gone sideways. If you look at the S&P, before we go to our first caller, same thing. We've been 4,028 in the S&P just about the beginning of November, and here we're at 4,032. This is a digestive phase. I'm going to our caller. Who is the caller we've got? Mike in Ormond Beach. Mike, how are you?
Basil, I'm doing great. Yeah, I've been listening to what you've been saying the last couple of days about a digestive period. But are we at an area now with the S&P, like on a 15 and 30-minute chart? It looks like we may get some kind of a bounce. What's your opinion of that? Looks like we actually are right now a little bit.
Yes, if you look at the E-mini, we've gone to a peak C, we've pulled back, and then we just made a leg D. But I still think it's in a digestive phase, and that right at this moment, you want to hold on. We've got a break coming up. There are a couple of things I always like to say. There's Mike S&P from Ormond Beach. We'll be right back with Mike, and the Dow is now down 233, S&P down 37, coming back a little bit from the big smackdown at 10 o'clock.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Folks, we're back, and we're on with Mike Norman Beach. So, Mike, if you're looking, I don't know if you can see my chart right now. I've got the 10-minute chart. I've got the 1-minute chart, and I wanted to show you. If I take that sharp candle, which is basically looks like Chapman, a red Roman candle, it didn't hold long enough under the halfway marker of the long wick to drag it down to the low. Instead, it started rallying up. And for those of you who know my charts, and I've been doing this exact same pattern over and over and over again, maybe not another 1,000 times, but at least 10 or 20,000 times, just in the last 2 years alone. I do this all the time. I grab the long wick and then I draw a rectangle formation. And my rule of thumb with rectangle formations is that the price, if it starts to make higher highs and higher lows in that time frame, I used to say in a shorter time frame, but we've seen it so many times this past year that it's even in the same time frame, there should be a rally that takes it to just on, just under, or just above the previous high. In this case, it was the high of the candle in the 1 minute chart right here, which was a high of 4,039 round number. And it went to at peak D. So the rule of thumb is the rectangle, if it makes higher highs and higher lows, as it works its way towards the top of the important candle, this is different to when it's a big spike to the upside and pulls back. This is a spike to the downside and had a big rally with this ugly, really huge, one of the biggest candles we've seen in a long time, maybe since Friday. But in the meantime, the rule of thumb is it goes just under, right on, or just above the previous high. And then if it takes out the halfway marker, starts to close under that, there's a really good chance it's going to go to the low. So just on the 1 minute chart, that's what we've just seen. It went to a peak D, and the high that we were talking about was 4,039. The high at peak D, this doji candle that was made at 10:28 this morning, 4,040.50, is a tad higher. It pulled back. It's now holding the midpoint, and I'll just draw that in right here. How can I do it so it's kind of thick? I'll just do it I'll do it this way. So this is your midpoint right here. And normally I would use the body of the candle, and it says that's your marker right there. So if it starts to trade at 4,028, be careful because it could go all the way down to test the low of the day, which so far I think is 4,022. So, yeah, so that's the thing. And what I'm really looking at here, it's a test of many aspects of what's going on at this particular point. The reason why I didn't want to go like we did once we recently going to the SDXS, which was 3 times short the S&P, is I see this rotation. I'm actually looking, I think, am I correct in saying that deep down your question is there enough resiliency in this move to have a much bigger bounce? Is that the question?
Well, I wanted to go. I've been trading intraday, and I wanted to get short again. And I pretty much did go back in on the commercial break for a little bit. So
okay, so now what we're looking at is
SDS, because on my chart it bounced up a little bit, then it failed, and then I got some more SDS. So.
Okay, you got the SDS. So the SDS is making this almost a cup formation. What you need to see in the SDS, and I still see enough residual strength to maybe just go sideways a little longer. So you got to be careful because the low at the 50-period moving average in the 1 minute chart of the SDS at 41.77, if it starts to go into 41.74 at any stage, be careful because the 200-period moving average is at 41.52. I know we're only talking pennies, but when you're in these things, it kind of adds up. So that's what I'm looking at.
Yeah, I keep very tight stops, and I have a, trading account so I can go in and out as many times as I want. So
fabulous.
A lot of times I'll just trade on a 1, 5, and 10 minute chart, and
a lot of people do that. Yes.
Yeah.
So the other thing is within the rectangle, I just wanted to say to you, I don't know if you follow the E-mini at all, but let's go to, you do. Okay, so the E-mini, if it starts to trade above 40.50 for 2 out of 3 bars, there's a chance it could try for the 40.46 level, which is the 200-period moving average. If it has that kind of strength, it says you've kind of raised the base for a good 30 minutes to an hour, and I wouldn't mess around. Maybe just time to take a break. But this is exactly right, because if this starts to, the 9-period moving average has just crossed to an L, meaning for the moment, the 9 is over the 14. That's good, but I've seen this happen lately. Look how it went from L to S back to L in such a short period of time. It says this choppiness is just saying that there's more internal weakness and that you've got to be careful. And I'll just make it real clear that if at any point 40.28 on the E-mini gets taken out, preferably for two bars out of 3 minutes, that's going to say be careful if we go all the way down to the bottom. So your eye is correct in what you're looking at, and those are the numbers. So I hope that helps you.
Yes, it does. Yeah, I can see like from about maybe 10 a.m. till now, it's just like you said, we're in kind of a choppy period right now.
Yes.
So it's just,
right.
So.
But there
thank you, Basil.
There are just enough stocks in each sector to just give it a little bump. And I'm just saying if it starts to close above the high that was made at that peak D, I would say, all right, hold off and you can do it again. So, hey, thank you for the call. Always appreciate it, Mike. Thank you.
Thank you, especially for everything you've been teaching us throughout the years. Great education, Basil. Thanks.
Thank you very much. It's my pleasure. So, folks, let's do this. I'm going to move this out here. While we're talking about, I haven't got to all the things I said I would do. What's the time? Okay, I've got a little time. I just wanted to show you, look, gold, the gold contract. Look what happened. It's down 21 right now. But look at the beautiful symmetry. You know, I talk about the geometry of the market. I'm becoming more and more convinced that the geometrical patterns are just astounding. Look at this beautiful cup formation here, left side, right side, price, time match, breaks out. What's the Chapman wave notation? Gets you a buy signal to a buy mode, gets you to at least a D. Go E, F, it can go higher, but D is your objective. It goes to this peak E. And then I measured this as this was coming down. I said, you know what? If this takes out the low that was made in the gold contract and the 1 minute continuous contract charted 20 minutes to 8 this morning, Eastern time, of 1806.9, we could get that 1-to-1 to the downside. So I drew this in and I just left it. I didn't do anything about it. But the actual pattern of the arch formation made, I had to use a different bar for symmetry. There's a particular bar that I use if there's nothing that really looks like it's going to match to say you can come down. And how do you draw the number of bars on the right side when you don't get the plumb line exactly at the bottom or the top? Well, there are ways of doing it. So I did this and it did that. And it broke the support that was looking at the doji candle in gold at 1806.9. And it went down. And it made another cup formation, failed the little doji candle high with a 1-to-1 measured move, came down, did another one to the downside, broke down, and lo and behold, the pattern that said to me, there's your 1-to-1, it even took that out. And now gold is down much further. And look, the pink 9-period moving average has been pink since it broke down right there at 9/11 this morning at 1804. And here we are at 1787. And I talk about a 2-click day. Gold could have had a 2-click day. I'll be back. Basil Chapman. We've got to look at some of the other gold aspects from the questions that I've had. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, I'll get to that in a moment, but I had a quick question. Someone sent me saying, I'm thinking of going along the UNG. What would you do? Well, the natural gas continuous contract has just made its second peak D in a cup formation. It did a low this morning of 5.725. It's trading right now at 5.80. It doesn't sound like much, but wow, that's a big move to the upside after the V-shaped pattern, left side, right side price time match says that there's a chance that if it, maybe I'm making this too finessed, but at 10:50, what are we now? We're 10:42. In another 8 minutes, I don't think it can do that. But this second peak D in the 1 minute chart is suggesting that the 200 period moving average, which again has been hit. I mean, how important is the 200 period moving average? Chart after chart after chart, not hundreds, thousands of charts that I've shown, shows you that it can be a support or resistance level. It's an easy thing to do. You don't need to add anything. It's just sitting there, the 200 period moving average at that 930 high at about 586. It got a peak and a pullback and it went away. And as it gets closer and closer, the second and third time that it starts to get there, that's where you want to see it become a propellant and not a repellent. Well, it's pulling away from this peak D. I would just suggest you, if you are, it depends on your risk tolerance. Right now on this pullback at 5.79, I would have a stop of 5 cents. I don't know what it trades at. I should know. I don't know the numbers. But right here at 5.79, if it's able, I like what's going on. I love the fact that it gapped down and it keeps trying to push away from the 572 level. So I'm just going to say it's a real tough call. Let me just see if I can go to the, there we go. So I'll move that away. I don't want you to get into something that has a lifespan of 30 seconds, which it could do. A, B, because that low can't be, the low bar cannot be the high bar. So I have to wait for it to turn up with a higher low to make it a trough. That's a trough. Now I can go A, B, C. Yes, I know what I'm going to do. I'm going to say you could nibble here at 5.787. So let's go to the UNG to see how that corresponds. UNG, let me type it in the right place. UNG. I just want to have a reasonable risk. That's all. The reward, we know what the reward is. The reward is that this becomes a low of at least more than a fractional second, but a low that holds into a rally tomorrow. And that rally tomorrow can take you quickly to the 1785, 1810 area. So it's 1762. It's not quite right. I've got a peak A, a phantom peak B. Now I've got a peak A, peak B, peak C, and a peak D. So this is, at this point, I have to consider this as an F in the daily chart of UNG. No, I'm sorry. I can't do anything about it right now. The risk reward is just not there. I'm saying I would rather buy confirmed strength than a falling axe, or at least, sorry, in this case, a falling knife buy. Okay, now let's do a couple of things. I need to get to this right away. So the questions come in over the weekend with my 1 hour video, which really was like a webinar. I tried to get as much of the education part of it in as possible. Look at this. The GDX has gone, I've called this a peak F. The 9 period is well above the 14 and the price is above the 9. Both of them, all three, the 14, the 9, and the price are above the 200 period moving average. We've got a crossover. I like to look at crossovers as a potentially good sign, but in a very short time, the amount of work and effort it takes for you to get to the crossover says just in the shorter term, be a little careful because I expect some choppiness. So the 200 period moving average of 28.27 is some kind of a support, but it's also this fulcrum that says sine wave, arch formation, cup formation, arch formation, huge, almost a V shape to the upside. And that says the weight of evidence is saying there's a lot more strength building up in the GDX, the gold miner ETF, market vectors ETF, at this particular point. So the question is, where was it? The question, could I just do the analysis, or was it to buy it? Basil, TRMND. I'll get to the chat in a moment. I'll put it down here. TRMD. Okay, I don't want to run out of time. Question about this. In other words, I'm just going to say to you, for subscribers to my opening call, yeah, can you take a look at the GDX? So, Iluta, I'm looking at it right now. I like it. I like the weekly chart. The 9 is finally crossed positive. I would use dips to, if you have a position, to add to the position, to start a position. If you're prepared to take 28.87 to 26.57, that's a 2-point risk. Because that's what I see as a possibility if the dollar, just in this choppy phase that I'm anticipating right now, continues and gold has a little bit of a bounce this week, then you've got to be prepared that the GDX could pull back. But I'm pleased that the GDX not only has started to catch up to the gold contract, but it's looking good. If you look at the silver contract, it's an even nicer share. Look how high the silver went above the 200 period from 21.3. It went all the way into the 23.5 area, and now it's at 22.5, let's call it. So I'm just saying that there's a little bit of a risk in terms of price. But if you don't want to miss it because the GDX is in your wheelhouse, this is what you really want, I'm saying a little starter position here at 29.46, but really it's at 28.40 to 27.20 that the real starter of a position should be if you aren't in it already. But right now I'm saying risk reward wise, if you just nibble here at 29.46, it could have a little bit of a bounce to start and maybe a new count that'll be G/C, and that could still go to D, and that'll give you about a week or so of upside movement before it comes back down to do some testing. I like it. I'm talking about money management here. How do you get in with it? Do you put in a stop? Here's another thing. The question should be, at 29.47, do you see it, no matter what happens, do you see it coming back to 29.47, either on the way down and coming back, or the way up and coming back? And the answer is, I think that 28 is in play now as a number that could be a repellent zone for a little while, and then it could become a propellant zone. So you could even think of no stop, saying even if it pulls back, there should be a touch of 29. Oh, it's 29.49. Sorry, 29.49 at some point. All I'm saying is that risk reward wise, I don't know how you want to play it. You'll have to figure that one out. But I am saying I would get my foot in the door because gold is acting so well. So a little nibble here at 29.50 is good. And then over the week, we'll talk about it because I want my subscribers. We missed a beautiful entry point in one of our very low priced stocks in the gold area. Just got taken out. I even had a split position thinking that I want to be in, and that got taken out the same day that we put it on. And I just was so disappointed. The next day, I was going to grab it again. I thought, subscribers have gone nuts. I've done that with the Dow successfully. Can I do it? But I didn't do it. So that's gotten away from us. So I'm in your position. Start a position small.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So just as we're about to wrap this up, I don't think I did everything, so I better do a lot of things in the next few minutes. So NG did get to that peak D above the 200-period moving average, couldn't hold it, and then it started pulling back very sharply. Now, what's really important is it's saying that for the first time, let's look at the daily chart, it's the first time that you're actually seeing some attempt at a buying coming in. I always find that really important to look at, to monitor, and you need now to see how it closes. I'd rather buy strength than buy weakness, falling knife type story. Okay, so now let's go through this. Crude oil. Crude oil is trading down now from its high this morning of 82.72. It's now at 80.30. It's already struggling under the 200-period moving average. If you're looking at silver, I want you to get back to silver. Silver's acting just a much better chart formation, but this leg potential peak F, we'll see if that happens. And a leg D in the weekly chart says it didn't get to the left side high of consequence that I'd drawn in. It's still got a whole couple of weeks to go before the target of 24.56 is hit. It's already gotten to 23. Today's high is 23.69. It's almost there, actually. And there's your Chapman Wave inside wedge target repellent line. So there are a bunch of things going on there. The one question I had was, Oh, where was it? Yes. What's going on with Amazon? Amazon is just not trading very well. And I said that before. I think this is going to be the season where there's so much competition and so much expenses, and they're starting to cut back. I think this is where Amazon just kind of chops around. I don't see it doing anything, just stuck in a range for now. Let's see. So don't forget, you got your Tiger Dollar sale. Go to the front page of TFNN. I've got this cup here. It's the old cup. You've got a brand new cup coming on. There's the one with the logo. That actually says Basil on it. But the new ones are coming out with all of those who buy Tiger Dollars. And what a deal that is. I mean, you're looking at the market, you want a deal. That's your deal right there. I'll be back tomorrow. Check out my opening call, my daily newsletter. See you soon. Stay tuned for Steve and great program rest of the day. Thanks for being here.